Joining us right now is Cody Wyszynski. He is co-founder of Bespoke Real Estate. That's a luxury broker managing over $1 billion in properties in Manhattan and the Hamptons. And Cody, first of all, you think we're going to see a big drop-off starting July 1st? Have we pulled forward a lot of sales in Manhattan?
I think you're going to see a quick flurry happen before the July 1st cutoff. But in all actuality, if you're analyzing the 10 million up segment, we're right on par with where we should be. So I think it's a motivation to make things happen because, as you said, everybody wants to save money. Nobody wants to spend more money in taxes. But in all actuality, sophisticated buyers are going to leverage this impact and pass on that delta to the sellers from a negotiation tactic. So I do think you're still going to see deals happen post-July 1st, probably at a wider spread than we anticipated before July 1st.
That means the market declines by 4% then, right?
It could, very well. But if you look at the data, call it 2015 is a banner year for New York real estate. I would argue that the last cycle, everybody was jumping for joy. The market was good. Sentiment was high. So if you're analyzing the market both on sentiment and on fact, there was 210 trades above $10 million in 2015 in Manhattan. This year, we're on track to match it. So in Q1 2015, it sets the pace for those statistics. There was 53 trades in the first quarter. 2019, there was 52 trades in the first quarter. So you can argue, statistically speaking, we are exactly where we should be.
Yeah, but
the overall market is down.
We haven't had 6 straight quarters of declines in Manhattan whenever they've been recording it for over 30 years. The challenge with Manhattan right now is that sellers aren't being realistic about price. They're still back in 2015. First, it was the market adjusted. Then it was SALT, and they had to adjust down. Now, even though the buyer is supposed to pay this tax, essentially the sellers are paying this tax, so they've got to adjust down again. So with 20,000 apartments scheduled to come on the market, new apartments this year, how does it go up anytime soon?
Well, I think there's a general enmeshment of the overarching market from zero to infinity dollars. But if we're talking about Bezos territory or Falcone territory, that supply shrinks down pretty significantly, and so do the players who are acquiring real estate. So you could say the overall market is suffering and it's on a steady decline, but if you segment that out, which I think you need...
A lot of these builders were building for the very high end because that's where the money was for years.
Right.
And there's just if you look at 10 million up, 20 million up, 30 million up, there's a lot of property on the market.
There's downward pressure. There's no question. And New York real estate, whether it's Manhattan or Hamptons or even Miami or luxury markets in general, you saw unruly price appreciation.
I don't see anywhere in the country right now where luxury real estate is not in a correction. Is there any place? I mean, Miami was doing well for a while, but now it's dead.
California.
Hamptons is dead. L.A., too many mansions. I mean, the high end, I don't see anywhere where it's going to go up anytime soon.
Well, I think you have to be very specific again. In the last 10 days, I've seen 7 $30 million plus contracts signed. I did 4 of them. So, I think you have to look at it very myopically. Yeah. But I agree with you. I think the downward pressure is necessary right now because buyers in this price point, they don't need to buy. This is a pure desire, not a necessity. So they're looking at the game and saying, I'm patient money. When the right thing comes, I'll negotiate a harder deal. So the tax implication is being used as an advantageous arrow in order to get a better deal and drive better value. But still, people who are worth
6% on a $30 million plus dollar.
Never. Lucky. If you're happy to pay, I'm happy to take it.
What do you think the commission was on the Bezos place? Like 3, 2?
I think when you're getting into that stratosphere, brokers are happy to do it for much less. So just it's general rounding errors in the sake of things. But as you said, no one wants to give away money.
Right.
And a broker who is in this position, I think they're happy to just take the recognizable name and notoriety of the deal, but they're getting paid handsomely for what they did.
I wanted to ask you quickly on these developments in New York where there's 20 or 30 condos, and then the last 2 are the penthouse split in half. That's all the profit.
Typically.
Yeah, and so as a guy who sometimes finances on the debt side, I look at there's so many where they haven't sold those 12 to $15 million units. Everything else is $3 million. These guys are going to lose money.
Well, they need to restructure the capital stack, and I think that's what's happening generally. Look at Miami, look at New York. They typically wait for that bonus at the very end for the unicorn to come in and take it. So I wouldn't say they're losing money, but their value proposition certainly changed typically for the negative. So I think New York real estate, these big developers, they're waiting for this pop at the end or a Bezos type deal, which often doesn't come in the manner that they want.